In today's video, I'm giving you a Raiz Investment App update. I opened my account 4 years ago. I'll show you what's happened. Thanks for joining me today. If we haven't met before, my name's Angela. I'm your money messenger. My background is working in financial planning. I've got 20 years experience in that industry. So I've learned a lot about how to use money smarter, repay debt faster, and get wealthier. So I'm sharing some of that knowledge with you on this channel. Please don't forget to subscribe so you don't miss a thing. And if you have any questions about money or things you want to hear about in future videos, just pop a comment in the box below. So today I'm giving you an update on the Raiz Investment App. I started my account over 4 years ago, and I want to give you a little update on how the balance is going, how the investment returns have been, and just what's happened in that time. There's a lot of videos about Raiz now, and some of the accounts haven't been held for very long. So as someone who's been using it now for over 4 years, I thought I want to give you a long-term perspective as to how much of a benefit it can be, how advantageous it can be for you as well. There's a lot going on at the moment in the world, and there's a lot of new investments popping up, such as crypto. And what we've seen in all these lockdowns and crisis happening over the world is that there's a lot of young people jumping into the share market because they're trying to find ways of making money. Perhaps their job has been affected, or things aren't like it used to be in the income department. So we've seen more than ever young people jumping in the share market, jumping into crypto, trying to make some quick wins. I'm all for making some money, but you got to know the difference between investing and speculating. Investing is when you invest long term. That's minimum 3 years, preferably 5 to 7, depending on how much shares you want to invest in. The more shares you invest in, the longer the investment time frame should be. With things like crypto and the gains that people have made in a very short term, that's not investing, so to speak. That's speculating, particularly because it's a really new asset class. It's a very new type of investment. So don't get confused when we talk about investing as all investments are equal, because they're not. If we're talking about crypto and things that we're speculating in the market, maybe we're jumping in, jumping out, that's trading, that's speculating. Should be a small portion of your overall money, and that's different to what we're talking about today. Today, I'm talking about the Raiz Investment App, which is a long-term passive investment. When you invest, you can either invest a lump sum or a small regular amount over time. The advantages to doing it over time is, not everybody has a lump sum to invest, but also it can be a good way to dip your toe in the water when you invest a monthly amount. It can be a savings plan in the background of life, just working there for you, and can take away some of the fear of getting started with investing, because you're just adding a small amount. You're getting started and you're building up over time. As with anything in life, consistency is key. Whether you're trying to get fit, whether you're trying to build a house one brick at a time, consistency is the way. Investing is different to speculating. If you want to do crypto, if you want to do share trading, do that with a small portion of your money. But for your foundational investments, your long-term wealth creation, your safer way of actually growing wealth, consistency is key. Pick an amount, add it to your portfolio, and keep doing that for a number of years. Put it in the bottom drawer, as my old financial planning boss used to say, and forget about it for a number of years. So after 4 years, here's my Raiz account. Today's balance is at $17,841. So that's just over 4 years. Now, the way I've been doing that is I do my roundups, which means the Raiz app, every time I make a purchase, I've got several of my bank accounts linked to the Raiz app. Every time I make a purchase, it will round up that purchase to the nearest dollar. So if I buy a coffee for $4.50, it will round it up to $5. Raiz doesn't take that 50 cents straight away. It waits until all the small little bits of money accumulate together. Once it hits a threshold of $40, then Raiz will take the $40 from my bank account. If it goes over that, then they'll take a little bit more from my bank account. On average, my roundups are $40, $50, sometimes $60 a month, but say, $40, $50 just for argument's sake. I've also been adding to that, because I want to speed things up, $200 a month, about $50 a week. I've set the reoccurring investment in my account. You can see a picture here. So $200 per month comes out on the 5th of every month. I've been doing that now for 4 years. I've never once missed a roundup amount they've taken from my bank account. I've never once missed the $200 per month. It's just something that I treat almost as another expense of my life, just another bill, if you would. The important part is that you always make sure you have some money in your nominated bank account for Raiz to take these monies. There's no point in doing all this if they keep trying to take your money and there's nothing in your account. So just always in the back of my mind, the account that I've selected for Raiz to take the money from, I know leave a minimum of $200, $250 per month in there for Raiz to take. So then what Raiz does with my money is once they take it from my bank account, they then buy into the portfolio that I've selected. What are they buying? They're buying ETFs, exchange traded funds, which are essentially a portfolio of several ETFs, and the ETFs each have a whole bunch of different shares in each of the ETFs. So the Raiz aggressive portfolio will have 5 or 6 or 7 ETFs in there. In those 5 or 6 ETFs, there's a whole bunch of shares in them, and they all invest in different types of shares depending on the ETF. If you're going for more of a moderate portfolio, it will still have ETFs in there, but you'll have less exposure to shares and more to cash and fixed interest. So it's more of a moderate portfolio instead of more of an aggressive one. The more aggressive you go, the more exposure to shares you have, and the longer you need to leave it for it to invest. So here's my returns. You can see of the $17,841 that it's worth today, I've invested myself $13,419. That is made up of my $200 per month savings plan and my roundups, which are about $40, $50 a month, depending on how much I spend. So the difference between that is $4,442. So on average, I've made $1,000 per year for the last 4 years. Now, some people might think that's a lot, some people might not think that's a lot, but what you've got to remember is that I started with zero. So at one stage, my account was only $500, then it was $1,000, then it was $1,500, and so on and so forth. Had I invested the whole $17,000 4 years ago, my returns would have been greater than had I started with a small amount building up over time. So this is why it's super important to leave an investment for the long term, particularly if you're picking one of the aggressive portfolios, because you need to give it time to return. You need to give it time for the shares. So that doesn't mean starting a Raiz account for 6 months and then pulling it out because you need it for a holiday or you need it for some other purpose. It's about leaving it, particularly if you're picking an aggressive portfolio, for 4 or 5 years. If you're picking one of the moderate portfolios, then maybe a time frame of 3 years is fine because you have less exposure to shares. I'm going to do another video which will teach you exactly which portfolio you should pick, which one's best for you. So at the end of the day, don't worry so much about how the returns have been, because it's actually quite hard to tell when you're building a portfolio from zero. You know, when you're starting from $1, $2, $3, $4, it's harder to see how much has my return been. But if you look at that says I've made $4,000 over the 4 years, $1,000 per year, would you be happy with that? Yep. Is it more than you're going to get in a bank account? Yep. Is it more than you're going to get in a high interest account or a term deposit or an offset account or anything like that? Yep. Could I have made more if I maybe invested direct in the share market myself and picked individual shares or bought the ETFs myself, like using a NAB trade account or a spaceship account or something? Possibly, but then I would have had to put that effort in and that knowledge in to know when to pick, when to buy, what to sell. When I'm using a Raiz investment app, I'm letting the investment manager do the work for me, and I'm just leaving the money with them to do that. But that means long term. So when I started up my Raiz account, I had a 5-year time frame in mind. So I'm only actually 4 years into my 5 years. I've got another year to go. So leave the money alone and let it keep building. Remember, consistency is the key. And don't switch portfolios. Every time you switch portfolios, it means you're selling down and then rebuying. That comes with costs, that comes with capital gains implications. You might sell down when the markets are not the best time to be selling. Just leave it. Don't switch between portfolios. The worst thing you can do with a Raiz app or any type of investment is to pick a portfolio today and then in a few months you decide to change it and you switch and flick back and forth. Don't do that and don't pull it out. Just leave the money alone. Remember, this is a long-term investment, something that's just done on the side for your background wealth creation. The reason you leave it long-term is so that you can ride out any volatility of the share market going up and going down. See here, this is only the last 3 months of my portfolio. The returns are up, they're down a little bit. Then we see here with 6 months, Now it's starting to move more, we're starting to go up more, but there's a lot of stepping still, up, down, but still going up over time. After a year, you can really see the difference in the portfolio, how the value is growing, and there's less volatility. There's still staircasing, still going up a ladder, so to speak, but less volatility. It's all averaging out in the end. And after 4 years, here's maximum returns, minimum volatility. I can't remember what it was worth 3 or 4 years ago. I can't remember what it was worth when the share market dipped about a year ago. Who cares? It doesn't matter. It all washes out in the end, and the end should be further away than closer. That way you won't notice all the short-term ups and downs. So after 4 years, my portfolio has grown to almost $18,000. And that's only with $200 per month savings and the roundups about $50. What if I double that? What if instead of $200 per month, I was putting in $400 per month? After all, it's only $100 per week of savings. That means I'd have around $36,000 now or more. That's definitely a home loan deposit after 4 years. That's definitely an investment property deposit after 4 years. So don't look past long-term passive investing. This is not the only investing I do, but it definitely complements the other investing that I do. And it's just something in the background of life that keeps ticking away. So that's it for me today. Thank you very much for watching, and please don't forget to subscribe so you don't miss any of my videos that I'll be posting regularly. If you've got a question about the Raiz app or any other money related question, please leave a comment in the box below and I'll do my best to answer you and make a video for you. I'll see you all next week. Thanks, bye.